Hi, this is Rich from ForexProject.com. I'm going to go over a trade setup on the US dollar Canadian dollar daily chart today using Raghee Horner's methods of trading. I figured this was the best way to demonstrate it via video and audio. So right now I have a chart open of the US dollar CAD Daily Chart, and what I've drawn here is resistance line. Here is the red, support line is the blue, and these pink lines here are what Raghee calls the wave. And what the wave is the 34 EMA high, close, and low. And what she uses this for is to tell you whether the currency pair is trending or not. And the way she determines that is, right now, if you look at the lines here, they're strictly, if you were to think of them at a clock angle, you would say that they're at 3 o'clock right now. If I put my little transparent clock over it, they're at 3 o'clock. So you can see that we're not in a trending environment right now. So what we're going to look for in an environment like this is a momentum trade. And the only thing she uses as her confirming indicator is the MACD oscillator, which is in red down here. So what we do is we're going to wait for the price to break either the resistance line here or the support line here. But her confirming indicator is the MACD. And as you can see, the MACD, the momentum right now is up, and the MACD oscillator is above zero. So therefore, since it's above zero, we can only look for long trades. That's the confirming indicator. So we can only look for long trades. If the momentum was down, we'd be looking for a short trade. So right now, we're not even going to think about the break below this level. We're going to think of the break above this level, and that's going to be 11227. That's where that trend line is. So we're going to look for 1 pip break above that, and we're not going to wait for the candle to close. Since we have the MACD as our confirming indicator, we're going to use that. So since it is above zero and it is positive momentum upward, we're going to look for a break above 11227. So we would go long at 11228. So we have our entry price here. What we want to find out now is our stop loss. And what Raghee says is you want to set your stop loss to where you think the trade is no longer valid. Now you might think the trade is no longer valid if it breaks back below this line or breaks back into the triangle here. But where are you going to set your stop loss? She recommends that you can set your stop loss at the middle wave line, which is the 34 EMA close. And in this instance, it's 11172. You can do whatever you want. You can set it for maybe the low of the previous candle or the low of of today's candle, but your stop is going to be a little too tight there, especially trading the daily charts. Since the low of the last candle is 11171 and the middle line of the wave is 11172, that's probably a good place to place your stop. So we'd be looking to go long at 11128 with a stop loss at 11172. So we have our stop loss and our entry. We need our targets now. So if you're trading in multiple lots, Raghee recommends you use the Fibonacci retracement tool to figure out your targets here. And so, I mean, everyone does this differently. I'm going to set my high for there and the low here. And so you see we have the retracement levels here. Now what do we want to look for our next target to be, since we're going along right at 11228? We'd look for a target at the 50% level, which is 11242, which is only 14 pips away. Raghee's rule is if you're 15 pips or less away from your entry price when comparing it to the next Fibonacci level, then you should just ignore that level. So we're going to all together ignore that 50% level, and we're going to target the 618 level as our first profit target at 11293. If you're trading in one lot, that you would close out your entire position at 11293. If you're trading in multiple lots, let's just say you're trading in 2 lots, then you're going to want to exit one position, one lot at 11293, and the second lot you're going to want to exit at the next Fibonacci level, which is the 786 level at 11365. So just to recap here, you're going to go long since momentum is up. You're going to go long on a break of this triangle at 11228 with a stop loss at the middle wave line at 11172 and a first profit target at the 618 Fibonacci level at 11293 and a second profit target level at 11365. So that's really it. I mean, you have to draw support and resistance lines. You need to know how to use Fibonacci, retracements. You need to have a MACD oscillator on your chart, and the wave, the 34 EMA high, low, and close. And like I said, clock angle, it's pretty easy to determine. You can see back here we had a trending environment. The clock level was probably between 12 and 2. Put my little transparent clock over here. Yeah, you see it was right between 12 and 2, so you'd be looking for a swing trade there. I'm not really going to get into swing trades. I was just talking momentum trades, and what you look for in momentum trades is for a clock angle between 2 and 4, preferably 3 o'clock. So this clock angle is almost exactly at 3, so this would be a very good momentum trade candidate. You can go to www.forexproject.com for updates. I have a lot more videos, a lot more content there. I'll be releasing another video sometime this week detailing Raghee's swing trading method. Okay, thanks.